Welcome to Clergy Taxes. On behalf of Brethren Benefit Trust, I'm Deb Oskin. I'll be your guide through the exciting and wonderful world of clergy taxation. Here's our outline for what we're going to cover today. First thing, clergy status plus clergy services equals clergy taxes, and that's really what we're going to be talking about today. How do you pay your taxes? And wait, there are ways to reduce your tax. You can opt out of Social Security and Medicare. You can use your housing allowance to reduce your income tax. What happens when you're retired? You can also reduce your tax by using business expenses that haven't been reimbursed by your employer. And you can use health insurance plans to get some of your expenses paid in a pre-tax fashion. And then I've got publications and resources. And after that, I've got a couple slides that you will want to stay and watch because they're going to detail when we're going to be having frequently asked questions sessions live in English and in Spanish the first Monday of every month starting in January through April. But first, about me. I didn't know anything about clergy taxes until my husband was ordained in 1989, and we lived in a parsonage that first year, and I cried when I did our taxes. It was we had always gotten refunds like so many young couples, and it was a surprise and not a good one. I was ordained in 2004 to Peace Ministry, and now I do this. I worked for one of the big box stores, H&R Block, in 2000 through 2011. I was a master tax advisor and a certified advanced instructor at a premium office. That's one of the offices that have walls and doors. I left Block in 2011 so that I could focus on the kind of clients I love best, clergy clients. And my practice now is 75% clergy clients. I started teaching and presenting on clergy taxes in 2004, so that makes this 15 years that I've been doing this. And I hope you'll have some fun. I try to make it interesting and humorous, and I've got stories to tell you along the way. In 2007, I earned my enrolled agent license from the Department of Treasury. That involves taking a series of really difficult tests about your knowledge about the entire tax code. Enrolled agents are licensed federally, which means that I can represent any person anywhere in the world who is required to file a U.S. tax return if they have issues with the IRS. I'm on your side. CPAs and tax attorneys can only represent clients in the states in which they've passed their bar or they're part of the state board. So enrolled agents really specialize in tax. We don't do anything else but tax, and we can represent people anywhere in the world. I decided in 2009, that I needed more training on helping people through audits. So I took a course through my professional organization, National Association of Enrolled Agents, and became a fellow of the National Tax Practice Institute. It was a 3-year course. I've done further training since then, but what I'm trying to let you know is I've got clergy in my heart, and I'm pretty well qualified on the tax side too. Here's how you can contact me. Now, I'm working on learning Spanish, but I am muy poco, okay? Terrible. And so it's going to be a while before I can communicate with you in Spanish. If you need to contact me over the phone, please have a translator that you trust standing by with you. And we can have appointments for phone appointments, Zoom conference calls, or in person if you're near my house in Columbus, Ohio. I have a secure fax line. You can fax me anything. My website has resources. So I'm sorry, currently all in English. And you can schedule appointments there on my website. And there's some more information about my website. I've got resources, scheduling an appointment. I try to put everything on there. And you'll see that I have built it all myself when you go look at it. And appointments are free, but please have a translator handy. So here's our first topic in the outline. Clergy status plus clergy services equals clergy taxes. So who's a minister? Sometimes what we need to understand is that the IRS thinks differently about things, and it's not their fault really. It's Congress that writes these silly laws. But so they have found that they need to define who a minister is. So for our purposes today, a minister is someone who is duly ordained, commissioned, or licensed by a religious body constituting a church or church denomination. This is not in reference to any particular religion, but a lot of this stuff was written in the 1950s, and if you can remember your history, there was a communist scare going on, and they often talked about those godless communists. And Congress wanted to elevate Christian ministers as examples for the society to follow. So that's a lot of this stuff was written in 1954. So it's interesting when you look back and see what the reason was that some of this stuff happens. So these ministers, not in reference to any particular religion, includes Christian ministers, rabbis and cantors. I have some of those in my practice. Imams, I don't have any imams yet. I had Christian Science practitioners, and I'm looking for my first Christian Science practitioner. The minister is authorized to conduct religious worship, perform sacerdotal or priestly functions, and administer ordinances or sacraments. So just saying that someone is a minister is not enough for these rules from Congress and from the IRS. The minister has to be able to perform these functions. So if you have a minister of music who does not perform any of these functions other than participating in worship on the music side, that person is not subject to any of the rules we're going to talk about today. Similarly, a youth pastor who only guides the Sunday night youth group and does not do religious worship, is not authorized to administer ordinances or sacraments or perform any priestly functions like anointing. Of course, in the Church of the Brethren, everyone does that, but we're thinking about the IRS definition, and they're thinking of someone who is a set-apart minister in our language. What does the minister do? So ministry services include performing sacerdotal or priestly functions, conducting religious worship, but it's more than that. Performing services for non-religious organizations when assigned or designated by the minister's church or faith community. And if not assigned by the church, if they involve sacerdotal functions or conducting religious worship. Okay, so that all sounds pretty ministry-like. Writing religious books or articles, controlling, conducting, and maintaining religious organizations, boards, societies, and other integral agencies under the authority of a religious body. Directing, managing, or promoting the organization's activities. So these are not things that we typically think of as ministry services, and yet under the IRS definitions, people who are commissioned, ordained, or licensed ministers of our denomination, who do these things are subject to the rules we're going to talk about today. Here's some more things that ministers do. Services performed at a church-related hospital or health and welfare institution. My husband is a clinical pastoral education supervisor. They now call themselves chaplain educators. He trains chaplains in hospital settings. He works for a Methodist-related hospital organization, so this is his category right there. Services performed at a private nonprofit hospital. There are chaplains at these institutions as well. And sometimes they have community ministers come in and do regular services. If those ministers get paid for those services, that money is going to be subject to the clergy tax rules we're going to talk about later. But not services performed at a government hospital or other government entity. Basically, let me go along a little bit more about that. If you work for the United States or any of its political subdivisions, if you are a chaplain in the military, if you are a fire chaplain or a police chaplain, these are government agencies and entities that have hired you, and that means that you are not subject to any of the rules we're going to talk about today. Whew! Nice save. Chaplains at VA hospitals, all right? So here's the bottom line. If you're a minister and you provide ministry services, special tax rules apply to you, and yes, prayer is appropriate. It's a very small niche in terms of the entire tax code, and it's spread across many different parts of the tax code, so there isn't like a section that says clergy, all the rules for clergy are right here. It's spread across all kinds of places. So for example, under Social Security and Medicare, they'll say, and if you're a minister, then. And then under employer withholding, and if you're a minister, then. It's spread out all over the place. And you may find that there are a lot of tax professionals who don't know very much about ministry taxes. You know you found a good one when they tell you they don't know very much about ministers' taxes. You should always ask, how many tax returns do you do for ministers? Do you think that they're simple or difficult? I once had someone tell me that he thought a clergy tax return was a simple return. I would not go to that person to do my taxes if I were you. So, what are the parts involved? Well, let's start with income. Because you're special, there are actually 3 types of ministry income. First is your salary. It's reported on your W-2 form in box 1, and I'm going to show you a W-2 form in a few minutes. The housing allowance, which is shown on the W-2 in box 14, and self-employment income, or honoraria, reported on Schedule C. That kind of income is when you've done a wedding and someone puts $50 in your hand and thanks you for doing the wedding. Likewise with the funeral. Or maybe you've been asked to speak on a religious topic, to do a revival or a tent meeting. That income is self-employment income or honoraria, and you have to report it, even if it's just $1. The following income is subject to clergy tax rules. So salaries and fees for ministry services. Offerings received for marriages, baptisms, funerals, masses, etc. That's what I was just talking about. Any amount the employer pays their minister employee toward their federal income tax or self-employment tax, not including any amounts that have been withheld from your income. So for example, employers of non-minister employees are required to pay half of the FICA taxes due for those employees. And when I say FICA taxes, I'm referring to your Social Security and Medicare wages and taxes. If you're a regular, I'm not going to say normal, but I could. If you're a regular employee, when you get your W-2, and again, I'm going to show you a W-2, it will have withholding for Social Security payments and Medicare payments. You are paying into the system. They're required to pay half of that, and you pay the other half. Your employer will withhold that from your income. You'll never see it in your paycheck. It's already taken out before you get it. But for ministers, they're not permitted to withhold Social Security and Medicare taxes for ministers. Ministers are common law employees who, instead of paying into FICA with the employer paying half, they're required to pay the whole amount, both the employer and the employee half, through SECA, the Self-Employment Contributions Act. So sometimes these employers say, well, we're paying this for our other employees. We'd like to pay this for you too. And you say, yes, that sounds excellent to me. More money is good. So what happens? Well, if they gave you the half of the FICA taxes that they would be paying if you were not a minister, they're giving you basically half of that self-employment tax that you're going to owe. Okay? Never turn down extra cash. However, and this is why some people think that they should turn down extra cash, after income taxes are paid on that amount, you're actually left with a little bit less than the employer intended. And so the IRS says there's a formula to gross up these payments so that after your income taxes are paid for federal, state, and local, and I'm from Ohio where we have 5 different taxes that you might have to pay, and 5 different tax returns that you might have to file. After all of those income taxes are taken care of, you still have left over the amount the employer wanted you to have. Now, this total amount that they're grossing up does go in box 1 of your W-2, and you do have to pay both federal income tax and self-employment tax on it. But if I gave you $1,000 to help you pay your taxes, and you had to pay 20%, say 5% income tax, well, let's say 10% income tax, plus 15% self-employment tax, that's 25%. How much do you have to pay on that $1,000? Well, $250. Yeah, that bites. But what if wait a minute, how much money do you still have in your pocket? You still have $750 in your pocket that you did not have before I gave you $1,000. That's why I say, always take the extra cash. And I've got a formula for calculating how to gross it up. You add up all the federal, state, and local tax rates that apply to your income, subtract them from the number 1. So 1.00 minus the total tax percent equals the net percent. That's the net of how much you will get after all those income taxes are paid. Then divide that net percent by the divide your net payment, the amount you're going to have left over, by the net percent. So net payment divided by net percent equals the gross payment. When you divide by, you may remember this from math in school, when you divide by a percent, you're actually increasing the amount. And you can check it by doing it backwards. It's a little complicated, but that's why it's in the slide, so that you don't have to remember what you listened to. Now, I've done this, like I said, for 15 years, and sometimes I've heard people say, well, we don't pay our pastor a salary. And I love Baptists who say this all the time with a little wiggle. They go, we give him a love offering. I just love saying that. It's a love offering. It's not money like that he has to pay taxes on. It's a gift. So that's completely tax-free, right? Well, no. IRS doesn't really care what you call something. It is what it is. It doesn't matter if you call it a love offering. If the pastor expects that money to come, even if they don't know how much it will be each time, but they expect on a regular basis that you're going to be giving them some cash, that's compensation for services. Now, the IRS will say every gift is compensation, but the courts have said, well, most of the time, if you're continuing to serve as their minister, that gift really is compensation from the church. And in the Church of the Brethren, we know that your employer is that congregation. It's not like a Methodist or an Episcopal system where the employer is the bishop and then the congregation gets the benefit of having you there, even though they might help pay it, where you're hired by someone other than the congregation. In the Church of the Brethren, as we know, you're hired by the congregation. So that means when the congregation gives you stuff, that's compensation. However, the courts have ruled that if you are leaving the church, either due to retirement or because you're moving on to a new call, those gifts are gifts, not taxable, because there's no expectation of further services in the future. Now, it gets a little tricky when you have gifts from individual members of the congregation. For example, birthday cards with a gift card inside, or a check for $100 because they knew you needed to get your car fixed. That's kind of iffy, right? Because members of the congregation are your employers. So on that case, IRS says it depends on the facts on the ground. What was the meaning behind the gift? Was it because they don't think they pay you enough? That would be compensation. Or is it because they knew you had a special need, or they were just giving to you out of the bottom of their hearts, right? Just a blessing to you. So that's a little trickier, but in general, if the gifts come from the congregation, then the congregation, that's compensation from the congregation, and the gifts should be on your W-2. I also do presentations to treasurers, and one of my favorite stories is from a treasurer who said there was a gentleman in her church who took one of those manila envelopes, with the fold-down top and the clasp, and he would stand outside the church, and people would stuff money in that envelope as they walked by, and he then handed that envelope directly to the pastor. Whoa, wait a minute. These are members of the church who are putting money in this envelope, and nobody knows how much is in there. Well, so that money turns out that some of it were checks written directly to the pastor, so the church treasurer, even if she could intercept that envelope and count it up, couldn't deposit it into the congregation's treasury, right? If she couldn't deposit it into her bank account. So I encouraged her just to get her hands on that envelope and count it up and then handed to the minister, so that at least the church knew how much was being given to the minister, because it has to go on his W-2. So after the first year, she came to my insight session at annual conference for BBT, for treasurers. She came back the next year and said that gentleman had moved away from the front steps of the church across the street to the parking lot. Well, he's still collecting money from members of the congregation, and I don't really care where it is he's doing it. Those weren't gifts. That was still compensation. Talk to your treasurers. They've got some really interesting stories. Now, there's other income that comes to ministers that isn't actually cash. So, for example, some of it might be cash and some of it might not be. The fair rental value of a parsonage, including any utilities paid by the congregation, provided to the minister employee. So this is what got us. That first year I did our taxes when he was pastoring and we lived in a parsonage. I did not realize that the value of the parsonage was taxable income that we had to pay self-employment tax on. I had no clue. That's part of how I got started doing this. I don't want anybody else to be in that situation. We were lucky that we could pay the taxes due. I think it was about $3,000 in 1989. And now you can do some math and figure out how old I am. I'll just tell you anyway if you ask. We were lucky we had the cash to pay it, because in the meantime, in the years following that, I've seen many clergy who that first year they don't have the money to pay the bill. And then they can't keep up with the following year, and it just becomes a snowball for those of us in the north who know what that is. Or a tidal wave. And it's no good to be living with that kind of debt on your shoulders. One of the reasons I do this, right, as a ministry, is because your minister could do so much more if they weren't weighed down by debt. And so I want the minister and I want the congregation to be able to do what's best and legal and allowed for the minister to lessen that tax burden in any way they can, and to make sure that the minister knows what's coming so that they can be prepared. So, living in a parsonage, ouch. Housing allowance paid to the minister employee. If you don't live in a parsonage, it's my belief that the church is still responsible to help you find a place to live and to help pay for that cost of the place to live. It's equal to being in a parsonage. And in the value of meals and lodging provided for the minister and their family for the employer's convenience. That last one actually is true for any employee, for any employer, and it's a little bit harder to understand when we're talking about parsonages and not parsonages, but it's there because it's in the law. So the first year I did an insight session for the Office of Ministry, they called, it was like at 9 o'clock. It was in Grand Rapids in one of these rooms that you had to take an elevator and then climb some steps and then go like in a spiral back to like the furthest room possible. And I only had a few people there. And one gentleman told me he was a free minister, which we know what that is. I don't have to explain that to our brethren watchers. He was a free minister with no compensation from the congregation. So what happens to his expenses on behalf of the church? Well, if the church isn't reimbursing them, then his expenses are cash charitable contributions, and the regular Schedule A itemized deduction rules apply. But as we continued to talk, I found out he was living in the parsonage. Whoa, now you have compensation from the church, right? The fair rental value of the parsonage is your compensation and should have been entered in W-2 Box 14, it's not very often that the fair rental value of a parsonage is entered on the W-2, but I would like to have seen a letter from the church saying, here's the value of the housing that you have gotten for free from us. Now, here's some income that is not subject to clergy taxation. And so if you have this kind of income and any of the other kinds of income we've already talked about, which seems unlikely, but if that's the case, then after we go through this part, you can check off. You don't need to pay attention to the rest of this film. So, offerings made to the congregation by others, right? They're making checks out to the congregation. You do not have to pay taxes on that as the minister. contributions by the congregation to a qualified 403B retirement plan set up for the minister employee, and pre-tax salary reduction contributions by the minister employee to a qualified 403B retirement plan, such as Brethren Benefit Trust. Now, you're going to hear the phrase minister employee quite a lot through this, and that's because I really, really want any idea that you had that as a minister you're self-employed to be gone. You are an employee of the congregation. They have to withhold differently for you. You have to pay different taxes, but you are an employee of the congregation. Here's some more stuff that's not subject to clergy tax rules. And I talked about this earlier, but here's the more detailed stuff. Income from services performed as a duly ordained, commissioned, or licensed minister of the church, as an employee of the United States, the District of Columbia, a foreign government, or any of their political subdivisions, even if performing sacerdotal functions or conducting religious worship. Remember, fire chaplains, police chaplains, the chaplain to the United States Congress. Income from services performed as a government-owned and operated hospital, chaplains at a VA hospital, or I'm from Columbus, Ohio. We have a pretty large university there in Columbus called the Ohio State University. I'm going to get in trouble for messing that up. Let me do that again. The Ohio State University. And the chaplains who work there work for a government-controlled hospital system. The governor appoints all the trustees to the Ohio State University. So those chaplains are not subject to these clergy tax rules. And finally, income from other services performed for non-religious organizations not listed earlier. I used to know a guy in our congregation who was an ordained minister. He was a supply preacher for our church. He was a prison chaplain in a state prison. He had his own Christian counseling service, and he worked at a Sunoco station. Now, ministers will tell you that everything that they do is ministry. I've heard that very, very often, and I believe you believe that. But under the rules that we've just talked about, the supply preaching is subject to clergy taxes. The Christian counseling is subject to clergy taxes. The state-controlled prison chaplain, not subject to clergy taxes because it's a government organization. And finally, the Sunoco station, nope, not subject to clergy taxes. So 2 of his jobs, he'll have to treat the income in a special way, like we're talking about today, and the other 2 jobs, he'll be treated as a regular/normal employee. So we've talked a lot about income, and I've been talking a lot about taxes, but not really telling you what they are. Here we go. Ministers are not subject to some taxes that most employees are subject to. For example, ministers are not subject to the FICA system of Social Security and Medicare taxes, where the employer pays half and the employee pays half. The ministers are also not required to have unemployment insurance, so churches don't have to pay that. Most churches do cover workers' comp, but most churches do not pay unemployment taxes. Ministers, however, are subject to 2 other taxes, and these are 2 separate taxes, just at the federal level. The federal income tax, which we're all familiar with, and self-employment tax. And in my practice, the self-employment tax due is usually the largest balance affecting ministers. That's the one we need to work on to get it as low as possible, because that's the one that hurts the most to pay. On the other hand, that's the one that Social Security recognizes as how much you earned. It's based on how much self-employment tax you paid. So when you're ready to retire, you look like you've earned more if you paid more in self-employment tax. It's a toss-up. So these are the clergy tax rules. And you might want to put a star on your handout if you have a handout, or you might want to pause this frame and write these down. All ministry income is subject to self-employment tax. All of it. All ministry income is subject to federal income tax unless properly excluded by a designated housing allowance. Employers are prohibited by law from withholding and paying FICA taxes for their minister employee. Employers must issue a W-2 to their minister employee. They cannot issue a 1099 miscellaneous. They should not give you a scribbled envelope with a list of all the checks they've given you, or even a printout from their accounting software. They can only issue a 1099 miscellaneous if the clergy person is not an employee of the church, like a supply preacher. Interim pastors are employees of the church. Supply preachers who pop in and out here and there are not employees of the church. Here's that W-2 I was telling you I would show you. So we can see on this W-2, boxes 1 and 2 are bolded at the top right of your screen. Box 1 is your federal wages. Box 2 is your federal withholding. You see boxes 3, 4, 5, and 6 are blank. For clergy, these boxes should always be blank. There should never be any numbers in them, not even zeros. Zeros don't hurt, but blank is better. So boxes 3 and 4 are Social Security wages and taxes, and boxes 5 and 6 are Medicare wages and taxes. You can see for this pastor, box 12 has a code E. That is the pension contribution made by the pastor out of the pastor's own funds. This is not the contribution that the congregation makes to Brethren Benefit Trust, but this is the portion that the pastor pays, and that's $1,200. And then as you go down the page, you see box 14, which is a big blank space. It's for information only, and that's where we want to see how much the housing amount is. Now, since I'm in Ohio, even though I wrote any state down, I gave the same income for box 16, state wages, and box 18 is state wages plus box 12. That's because that's how we do it in Ohio. I want you to notice the amount in box 2, going back up to the top of the page. That is the amount based on this pastor's total compensation, which I believe is $30,000. So if you add box 1 and box 12 and box 14, you get this pastor's total compensation, which is $30,000. In box 2, I calculated how much self-employment tax he would owe, and had the congregation, of course it's an imaginary congregation and an imaginary pastor, had the congregation withhold enough to cover that self-employment tax. So that's where that number came from. Oh, there's another thing there. There's a retirement plan box in, I think, row 13, and there's a little X in it. That's all, because he's got a retirement plan going. Now, if this table doesn't make any sense to you, just ignore it till I flip over to the next slide. But if it does make sense, maybe it will be helpful. So for clergy who are actively working as ministers, down the left-hand column, you see the different kinds of income, and across the top, you see the different kinds of tax. So the income would be self-employment income or honoraria, employee salary, housing allowance, and the fair rental value of a parsonage. Across the top, we see subject to income tax, question mark, subject to self-employment tax, question mark, subject to FICA taxes, question mark. So let's look at the self-employment line. Subject to income tax for clergy? Yes, self-employment tax is subject to income tax for both clergy and regular workers. Subject to self-employment tax? Yes. This is true for regular people and for, well, regular self-employed people and for clergy. Subject to FICA taxes? No, when you're self-employed, you pay the both halves of FICA, the employer half and the employee half, together in one big lump sum called self-employment tax. So that row looks exactly the same whether you're a minister or not a minister. Employee salary looks different. For ministers, employee salary is subject to income tax. That's true for non-ministers. But for ministers, employee salary is also subject to self-employment tax. That is not true for non-ministers. And non-ministers are subject to FICA taxes on their salary, but they are not subject, clergy are not subject to FICA taxes ever. You see that whole column, it says no, no, no. You see the column in the middle, subject to self-employment tax? Yes, yes, yes. And the only time it changes for the subject to income tax is when we get to that bottom row, housing allowance and fair rental value of the parsonage. The fair rental value of the parsonage is never subject to income tax because it's already assumed that you have excluded that amount from your income. You didn't pay anything for it, you didn't get money for it. The housing allowance, I say maybe, because of the rules we're going to cover later. A housing allowance is only subject to income tax if you didn't spend everything that was designated as housing on housing. So that little bit that didn't get spent on housing will be subject to income tax, and that's why I wrote maybe in that slot, because maybe you will have some that isn't subject, maybe you'll have some that you didn't spend on housing and will be subject to income tax, but maybe you spent all of it on housing, in which case none of your housing allowance would be subject to income tax. More on this later. All right, well, tax, 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 income, 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 tax, tax, tax. Paying your taxes. All right, well, the easiest way for employees to pay their taxes is by having the employer withhold taxes from the employee's paycheck before he or she receives it. Employers are required to withhold income taxes as well as FICA taxes for their employees, but ministers, as you know, are a class unto themselves. Employers are not required to withhold income taxes from their minister employees, although they may do so if requested. If the minister's employer has other employees, then they're already involved in withholding procedures and should be willing to withhold for their minister employee as well. The minister needs to submit Form W-4 to the employer to give them the information they need to withhold income taxes properly. Of course, ministers fill out Form W-4 differently than everyone else. Here's a copy of Form W-4. This is for 2019. There will be, I hope that there will be attachments to show you what the draft form for 2020 will look like. So here are the line-by-line instructions for Form W-4. Line 1, first and last name. Line 2, social security number. You never fill out a W-4 with both yourself and your spouse. It's only for the single person who's the employee. So line 3 asks if you are single, married, or married but withhold at the higher single rate. I recommend that married ministers check the third box, married but withhold at the higher single rate. This allows the employer to maximize the income tax withheld. Line 4, not applicable. Line 5, allowances, enter 0. Remember, the idea is to maximize the income taxes withheld from the paycheck so ministers don't face a balance due at the end of the year. The higher the number of allowances, the less withholding occurs. That's why I tell you, enter 0 there. If you use the worksheet to tell you how many allowances you should claim, you will owe money. So just do as Deb says. Line 6, additional amount to be withheld. This is the most critical entry on this form. This entry allows ministers to withhold self-employment tax by using the income tax withholding system. So basically what we're going to do is we're going to have the employer withhold enough income tax so that it's enough to pay for both the income tax and for the self-employment tax. So the first step is to calculate your total self-employment tax for the year. Step 1, calculate your total ministry compensation by adding your salary, your housing, the fair rental value of a parsonage if you live in it, and any honoraria you might expect. Step 2, multiply that total compensation number by 0.9235. Step 3, multiply the result of step 2 by 0.153. This amount is the total self-employment tax due for the year on that total ministry compensation that you calculated in step 1. So this is your self-employment tax. Now, add the number of remaining paychecks you will receive for the year. If you're paid every other week, you get 26 paychecks a year. If you're paid twice a month, you get 24 paychecks in a year. If you're paid once a month, you get 12 paychecks in a year, etc. You can figure it out for yourself. Now take the amount of self-employment tax and divide it by the paychecks and put that number on line 6. Having this additional amount withheld helps ensure that enough withholding occurs to cover the minister employee's self-employment tax. But note, this amount is a goal so that the minister employee has enough withheld to pay their self-employment tax. I just said that 3 times, so you should be getting that concept. But you should consider your own personal budget and cash flow to make sure you can afford to have this amount of money withheld from every paycheck. It could be $300 or $500. You need to look and see, can I afford to have a paycheck that's smaller by that amount every time I get a paycheck? This form's scheduled to change in 2020. A current draft form is available from irs.gov. Just look up Form W4. Now, if your employer isn't willing or able to withhold income and additional taxes for you, the minister, you must make estimated tax payments. They're commonly called quarterly taxes, but they are not quarterly due dates. They're due as following. The first voucher for the following year is due April 15th. Now let's stop right there. What happens April 15th? You have completed your taxes for the prior year. You may owe a bunch of money. Typically, I tell several people the last week of tax season, that middle week of April, that they owe $6,000. I'm not making that number up. That's a typical year. I don't know whether they're going to be happy about that or unhappy about that because I don't know what they expected. Some people thought they'd owe 10, so they feel great. Other people say they've always gotten a refund and what the heck went on. So April 15th, you have to pay whatever balance due that is for the previous year and take that balance due, divide it by 4 basically, and pay another quarter of it by the same day. That's a lot of money. That can be a lot of money. June 15th, that's only 2 months later. That's not a quarter. September 15th, that's a quarter. But I mean, look at how front loaded that is, right? You have to pay the previous year's taxes April 15th, the first quarter payment April 15th, the second quarter payment only 2 months later, then you get a 3-month reprieve September 15th, and then you get a 4-month reprieve January 15th. Those are the 4 quarterly tax payment dates every single year. They may be adjusted a little bit. If the 15th falls on a weekend, then it will be the next business day of any of those months. But it's a lot harder to pay estimated tax payments than it is to have your employer withhold. You have to come up with a whole lot more money at a single point in time. You can't spread it out evenly throughout the year. And withholding does do that exactly. It spreads it out evenly throughout the year. And you never have it in your bank account, so you're never tempted to spend it on something else. But we're here because your employer is not able or willing to withhold income taxes. So this is your requirement. You must pay estimated tax payments. When you do your taxes that are due April 15th, if you owe the federal government more than $1,000, you pay a penalty. They want to get those tax payments throughout the year, and one of the ways they do that is by penalizing you for not paying them enough. Now, my goal is to help you pay the least legal liability, right? I want you to pay as little as possible or get the highest refund possible. And if you are paying the government a penalty plus interest on not paying your estimated tax payments on time or enough, then you're giving them too much money. So that $1,000 balance due on April 15th, that needs to be your goal, to have it less than that, to make sure that your estimated tax payments don't end up being penalized because they weren't enough or you didn't bother making them at all. So how much should be paid? Well, we go back to that self-employment tax due for the year. Check that prior year tax return to see any amount that you also owed on top of that. Basically what I do is when I do your tax return at the end of in April, I know how much your total tax liability was, and I know that if you had any withholding, I know you'll have probably about the same amount the next year. I subtract that out and I divide the rest by 4, because maybe your spouse has withholding. If there's no withholding at all, I take the total tax due, and it's usually written If you look at your tax returns, the actual forms, I know nobody does that, you'll see a line that says total tax liability. You take that number, divide it by 4, there you go. If you use the estimated tax worksheets, you could end up paying too much. Take your total tax liability and divide it by 4. Here's an estimated tax form. It's pretty simple. The only number you really need to fill in is in that upper right corner in that box, just under where it says payment voucher 1, and then it has the due date, and then there's a box where you fill in the amount. Below that, you put in your name, social security number, your spouse's name and social security number if you file jointly, and your address. People who file jointly can pay estimated taxes separately. Just put only your own name on there. And when you write a check, make sure you write it out to Department of Treasury, not IRS. I had a client whose IRS made out estimated tax check was taken and signed by someone. It was $3,000. IRS was unhappy, we were unhappy, the bank was unhappy, everybody was unhappy. So write United States Treasury, that's what you're supposed to write, United States Treasury, and put that in the memo. It's for whatever tax year it is, estimated taxes. Finally, Deb's going to tell us how to reduce these taxes. Oh my gosh, it has seemed like forever that Deb has been talking about all this income and all these taxes, and holy cow, how am I ever going to pay all of that stuff? Well, here's one way. I don't recommend it. So ministers who have taken a vow of poverty or whose earnings are sent directly to their order are automatically exempt from all self-employment tax. That does not apply to us. This second bullet does apply to us. Other ministers can opt out of the Social Security and Medicare system for moral or religious reasons, but they must be morally opposed to any form of public old age or medical insurance. This election is revocable. That means you can't go back and change your mind later. Once you do it, you do not pay self-employment tax ever again. And I have some clients who are young people with small children, maybe 4 or 6 small children, and I understand that they don't want to pay their self-employment tax. However, when they get older, they're going to, let's just say I don't really believe that they're putting all of that money that they should be paying in self-employment tax into a retirement plan. And so when they get older, they might find themselves unable to support themselves and unable to retire. This is the top of the form 4361. This form doesn't change. It has to be filed by the due date of your second tax return showing any ministry income, but they don't have to be consecutive years. It just has to be the second tax return you turn in with clergy income on it. And it's not in effect until it's approved by the IRS. So you can file this form, but until you get an approval back by the IRS, you still have to pay self-employment tax. Once you get the approval, you can go back and amend any tax returns that you have filed. Remember, this is only your second one, and get that self-employment tax back. You don't accumulate any quarters for eligibility in Social Security and Medicare from ministry income because you are not paying self-employment tax, and that is how you accumulate quarters. And it takes 40 quarters to be eligible to receive Social Security and Medicare. You're still entitled to Social Security and Medicare benefits received due to secular work and or due to your spouse's secular work. And you can buy into Medicare, but be careful. There's a narrow window of 3 months before and 3 months after the month of your 65th birthday. It's a 7-month total window to sign up for Medicare. If you miss that window and you don't have employer-provided insurance during that time, when you do eventually sign up for Medicare, you'll pay an increased premium of 10% per year after you turn 65 to the point where you actually signed up for Medicare, and that could be a whole lot of money. The other issue we have here is an issue of integrity. you swore on penalty of perjury on that Form 4361 that you were morally and religiously opposed to any form of public old age or health insurance. So if you take the Social Security and Medicare benefits you may have earned, or your spouse may have earned, or if you buy in, then in my mind that's an issue. That's an issue. And it's up to you to decide it. But because of that problem of going all those years without paying any self-employment tax and not earning Social Security and Medicare quarters, I don't think it's a good idea to opt out. I told you I'd tell you how old I was. I'm currently, as of this date, 59 years old. I'm at the end of the baby boomers. There's a lot of us. Social Security and Medicare are not going anywhere. You don't have to worry about it not being there when you get older. The topic everyone wants to know. Reducing total tax, number 2, housing allowance exclusion. The minister's housing allowance is called by many names, yet they all represent the same thing: the mechanism by which ministers are permitted to exclude some of their income from being subject to federal income tax. Now, remember I told you that all of your income is subject to self-employment tax. The housing allowance does not reduce self-employment tax. The housing allowance can reduce income tax. So people will call it, I like to call it a housing allowance or a housing exclusion. There's a parsonage allowance or exclusion, rental allowance or exclusion, utilities allowance or exclusion. It doesn't matter. IRS says it's what it is, not what you call it. Ordained, commissioned, or licensed ministers performing ministry services should, see the asterisk there, should designate all or part of their total compensation from their employer as housing allowance. The amount designated as housing allowance can then be excluded from income for federal income tax purposes, subject to certain rules, of course, and we will get to those. Now, is it possible to exclude all of your compensation from the church as housing allowance? Yes, it is. There is no rule against it. Up to 100% of your compensation from the church can be considered housing allowance. Especially if you are a part-time or bivocational pastor, you're probably not making as much from the church as you're spending on your home. And you're going to see a list, and there'll be, really should have asked Nevin about this before. There should be an attached handout that you can download in order to see all of the different things that you can take as housing allowance, all the different purchases that you make that are considered housing expenses. However, like I just said, all ministry income is subject to self-employment tax, including both the officially designated housing allowance and/or the fair rental value of a provided parsonage. Never forget that self-employment tax. It's very difficult to reduce that. I do have a way, but most of the ways we're talking about reducing tax are reducing your income tax. And that's what housing allowance does. So here's a short list of typical housing expenses. And like I said, there is a handout on my website. If you go to www.oskintax.com, was in the beginning of those slides on how to contact me. On the resources page, there is a handout and I forget what it's called, but you should be able to figure it out. It's about what things you can exclude for housing allowance. So I want to point out some things that maybe you have been told in the past were not permissible. One of them, repairs and maintenance, cleaning services. So a lot of tax pros will tell you that you cannot take cleaning services. The way the statute, the Internal Revenue Code is written, it actually says that you can't take the cost of servants, servants. Now, my mother grew up in a very wealthy family that unfortunately did not make it down to me. But they had, when she was a child, live-in servants in their home. They had a maid, a cook, and a chauffeur, plus others that worked part-time. So those three lived with them in their home. Those are the cost of servants. household employees, nannies, that you cannot take as housing expenses. But I've got a cleaning service that I pay to come in once a week and do a top to bottom of my house. And I totally take that expense as a housing expense. Just think about it for a minute. If you couldn't take the labor that someone did for maintenance on your home, then you couldn't take your lawn care or snow removal, and you certainly would have to separate out the labor from any replacement windows or other home repair that you're doing. I mean, it doesn't make sense on the face of it that cleaning services would somehow be exempted from that. I have some stories about how important cleaning services can be, but I will spare you those stories. Utilities. I live in Columbus, Ohio, but for about a dozen years we lived in the south below the Mason-Dixon line, and pest control was a necessary utility there. Internet, cable TV, and streaming services are utilities. And I want you to notice the landline phone or the personal use cell phone. IRS has long allowed the cost of a landline phone, but fewer and fewer of us have those phones that plug into a wall. Most of us only have personal use cell phones. And if that is the case and you do not have a landline phone, then all of the personal use cell phone costs in your household, I want to say that again, all of the personal use cell phone costs in your household are eligible as housing expenses. If you think about the parallel, when we had landline phones, everybody in the family used that landline phone. Now that we have cell phones, some of us have children with cell phones, some of us have family plans. Anything that isn't a business call is a personal use call and can be used for housing expenses. Again, on the resources page of my website, on the back side of that list of housing expenses is a way to help you figure out how to count up your personal use cell phone use and how much of your bill you can exclude from housing, you can exclude as housing. Now let's talk about rules for different situations for housing. What if you're working as a supply preacher? The official designation of a housing allowance amount can be made by the congregation who holds the minister's membership and to whom the minister is accountable. This is a wonderful thing because if you know anything about supply preachers, they go from church to church to church to church, and getting each individual church to put something in their minutes saying that $50 or $100, that's a nice church, that's going to pay you for that sermon that week is all going to be housing allowance. That's just not a very doable proposition. Also, if you have pension payments coming out from a qualified 403B retirement plan that is not from BBT, you can also have your congregation designate that income is also housing. BBT automatically says that up to 100% of those payments coming out of your pension from ministerial services are housing, and so you don't have to do anything at all if you are a BBT member. So the language that you can ask the congregation to use would be something like 100% of all income received from clergy services or ministry services is designated as housing allowance until further notice. That way they don't have to do it ever again. Just get a copy of those minutes and keep them in your tax file. If this designation has been made, no IRS reporting is required. All those different checks you get from all those different churches don't go on Schedule C. They go on the clergy worksheets for housing allowance, and we'll talk about that later. Now, what if you're a clergy person living in a parsonage? The fair rental value of the parsonage, including utilities paid by the congregation, is automatically excluded from income before federal income tax is calculated. It's gone. But you have to pay self-employment tax on that total amount. The fair rental value of the parsonage has to be reasonable for its location, but it benefits the minister employee if it's on the low end of the range of rentals in the area. You should B, you should look at the parsonage critically. I've only met one pastor who said they actually lived in a model home. That parsonage we lived in when my husband pastored way back in 1989 was a beautiful 2-story home with an attic. There was gorgeous 10-foot tall ceilings, woodwork with pocket doors, green shag carpet in the living room, bats in the attic, 3 colors of linoleum in the kitchen, a working toilet on the back porch, and a dirt floor basement. So you can see it was sort of a mixed bag. Most parsonages are like that. So you have to take the condition of the parsonage into account for the rental value. You can also get a realtor to tell you what the rental value of the parsonage is. Have them walk through the building and take a look at the status and the condition of the building. That's a great way to find out what really is the range. But for your benefit, remember, you, the minister, are going to be paying self-employment tax on this. So you should try to get it to be the low end of the range of rentals. In addition, you're still bringing stuff into that parsonage, like furniture, cleaning supplies. You might be bringing some appliances in if they're not supplied. I remember we bought a portable dishwasher because there was no dishwasher in the parsonage. And we were spoiled, so we didn't want to do dishes by hand. You should have an additional housing allowance to cover these items that you're bringing in, and for any utilities that you might be paying for. This additional housing allowance is subject to the housing allowance rules, which are coming up next. Okay, so these slides have been for parsonages, not for people who are living in their own home. But if you have an additional housing allowance and you live in a parsonage, that additional housing allowance is treated like you're living in your own home. And here are the rules. The amount officially designated as housing allowance must be specified in writing in an official document of the employer before any housing allowance payment is made. So it could be in the budget. It could be in the leadership team minutes. That's the easiest place to put it because you may ask them to change it. You might want them to increase it or decrease it. If it's just in the minutes and not in the budget, it doesn't require a full congregational meeting to change. But that thing about it being in writing and before you start getting the payments, that is solid. You cannot wiggle around that. It must be in writing and it must be before any payment is made. The second bullet, or the second slash there, the amount must be used to provide or rent the home. The Internal Revenue Code says to provide a dwelling for the minister, which means if you have more than one home, I'm going to want your housing expenses for every home, and I want to know the nights you slept in each one. And I have clients who are snowbirds who do this. I add up all the expenses, I figure out how many nights they spent in each one, and I prorate the expenses by the nights spent in each home. I will not take housing expenses on 2 full homes if you're not actually living in both of them at the same time. And I'm not sure exactly how you could do that. That's why sleeping in it is the easiest way to tell. And finally, you may have heard of Rick Warren, the purpose-driven life. The amount cannot be more than reasonable pay for the minister's services. He apparently was getting a very nice paycheck and had a couple beautiful homes, and the IRS thought that he had, let's just say, abused the housing allowance privilege. It ended up that Congress wrote a Clarification Act in 2002 and stopped it from going to the Supreme Court. The amount, and here comes the Clarification Act, the amount that can be excluded from income before federal income tax is calculated is the smallest of the following 3 amounts. The first one, the amount you officially designated in writing. The second, the amount you actually spent. No, you can't just say, this is how much I designated, so obviously that's what I spent. No, I am going to want to see some numbers from you about what you actually spent. And if they're all really round numbers, I'm going to know you made them up. Finally, the fair rental value of the home. This is the part Congress added to stop the Rick Warren case, including utilities, furnishings, etc. Basically, everything in the home except food and clothing. Now I want you to stop and think about that for a second. Everything in the home except food and clothing. In my office where I meet clients, it's the formal living room of our home. And in the formal dining room behind that is where I do the tax work itself. That's where I have my big computer and my big monitor, and I do the taxes. But even in the front, I've got a bookcase that has all kinds of stuff that I have picked up from travels, have been gifts. I've got a collection of Star Wars Mr. Potato Heads. I have a 6'10" sailfish hanging on the wall that my grandfather caught in Fort Lauderdale in 1938. I have all kinds of stuff. When I look around that office, which is frankly cluttered, and I think, how in the world would I ever figure out what it cost to bring this stuff into the house? Basically, there's no way to do this. The fair rental value of the home you're living in, counting every single thing in it except the food and your clothing, everything else, spoons. We have a lot of spoons at our house. That's the silverware item we run out of first. Sometimes if my daughter and my husband are fighting over who has to do the dishes, I'll just go buy more spoons. So let's talk more about this fair rental value. For purposes of calculating the excludable housing amount, calculating the fair rental value of the home you rent or own is very different than calculating the fair rental value of a parsonage. The fair rental value of the parsonage is calculated based on an empty building, the yard, garage, and utilities paid by the congregation on the minister's behalf. This is easy to do. A realtor can give you a good range of rental values for the area, and remember the condition of the parsonage. I actually had some friends who moved into a parsonage and there was no running water for the first week and a half. Now that wasn't exactly the congregation's fault. It was my friend's fault who needed to move, but that was not a livable parsonage for that first week and a half. On the other hand, the fair rental value of the home you own or rent, or the fair rental value of that amount that you're using in addition to living in a parsonage so that you can cover the expenses of furnishing a home, that's calculated based on the home, yard, garage, and utilities, but with everything still in it. Look around your house and really see all the stuff you own. What would it cost to replace it all? There is no way to calculate this fair rental value amount. Since underestimating the fair rental value of your home can cost you significant tax savings, remember, if that's the lowest value, you have cheated yourself out of some of your legally permissible housing amount that you could have excluded from your income taxes. Here's my rule. Never allow the fair rental value of your home to be the smallest of those three amounts. All I want to know, if I'm doing your taxes, all I want to know is, what was the designated housing allowance amount and how much did you spend? And then when my software asks me about the fair rental value of the home, I'm going to put in a number that's higher than either of those. It's never going to be the smallest number. So how does this actually work? Well, let's think about it. If the amount that was officially designated in writing as the housing allowance is the smallest of those three amounts, right? The amount officially designated, the amount you actually spent, the fair rental value of the home, which is never the smallest number, then that's the amount that can be excluded from income before federal income tax can be calculated. But if it's not the smallest of those three amounts, then the excess of the designated housing allowance over the smallest, either, and it better not be the fair rental value of the home. So it would be either the fair rental value of the home or what you actually spent, has to be added back into income before federal income tax is calculated. It's usually added back as wages because it would have been salary from your congregational employer if it hadn't been housing allowance. Ideally, the officially designated housing allowance should always be higher than the minister employee's actual expenses. This way, the minister can take advantage of any unexpected expenses like repairs, furniture, disasters, to further reduce his or her income before federal income tax is calculated. If designated correctly, the minister will have a small amount of excess housing allowance added back into wages each year. And I'm talking maybe $200 or $300, not $10,000. That means you radically overestimated what your expenses were going to be and or did not keep track of any of your receipts. One thing that I'm doing this year is when I go through the grocery line, I'm separating my groceries into different receipts so that all of my non-housing stuff goes through on one receipt and then my housing stuff goes on a separate receipt. It's not very difficult. Just put a little divider bar between everything and put your credit card through twice. So here's an example of how to calculate it. The designated housing allowance was $10,000. The amount actually spent on housing was $9,000, and the fair rental value of the home, including furnishings and utilities, and never the smallest number, is $12,000. The smallest amount is not the designated housing allowance, right? So that difference of $1,000 is added back into income as wages. Basically, you need to meet or beat the designated housing allowance, and by designated I mean the one in writing. What if you have an office and home? Well, see, you just used all of your housing expenses on your housing allowance. So maybe you don't have any expenses left, but let's look at the rules. The area must be exclusively and regularly used for business. The IRS is really, really strict about this. I have, like I told you, I've got 2 rooms in our house that I use for my business, but neither of them is used exclusively. The regularly I could meet because that front office is the only place I meet clients, with the exception of maybe 1 or 2 clients a year that I might meet elsewhere because either they're, because they're ill, usually. Employees can only claim a home office deduction if the home office is for the convenience of the employer, not just because you bring work home and or would rather work from home. Okay, and when it says eliminated by TCJA,